Thanks, Chris. Now to our late news money man, Scott Phillips from Motley. Scott, good evening to you. And Chris mentioned the falling iron ore price, but it's got to a figure now where it could be an advantage for the big Aussie miners.
Tomo, good evening. Yeah, that's exactly right. Unfortunately, I'm not on Mike Henry's pay packet, of course, but the iron ore price is doing reasonably well relative to other producers. Of course, the Australian iron ore miners are lowest cost producers. Remember, they're getting it out of the ground and onto ships for something like $15 to $18 a tonne and still selling it for north of $140. So that's a pretty good gap, a pretty good margin. And of course, when you are the lowest cost producer, no matter how far the iron ore price falls, you're still going to make a few bob.
Now, the biggest move to the downside was Brambles falling more than 8%. The sell-off coming after an investor's update.
Yeah, it wasn't pretty either. When a company talks about transformational costs, you know that's language that pretty much says, hey, we're going to have some expenses here that hopefully are one-off, but are going to have to be incurred to keep the business moving forward. The net result is next year's profit expected to be growth of only 1 to 2%. Investors don't generally love that, especially when they're expecting more, and shares off 8% today.
Reserve Bank Governor Philip Lowe covered plenty of territory in his speech today, especially targeting those forecasting an early rise in interest rates.
Yeah, it was a really big speech, Tomo. A couple of things on rates. The first thing, basically, Lowe saying, look, you guys who are saying we're going to have a rate rise before 2024, cool your jets. It's not going to happen. They're waiting for both wage inflation and price inflation before they're prepared to do that. And on the RBA's own numbers, they're saying, look, it's not going to happen before 2024. So that expectation, the optimism, probably attractive, but not going to happen. The other thing he said, of course, related to rates was house prices. The RBA pretty much washing its hands of higher prices, saying, look, our job is to look after the economy, not to worry about high house prices. That's someone else's responsibility. And that's either buck passing or it's reasonable management. Other government agencies, I think, might need to step into the breach here if higher and frankly, increasing house prices remain an issue for the Australian residents.
Scott, he also said the RBA remains confident of a strong economic recovery next year, but acknowledged the September quarter growth figures are going to be bad.
Yeah, they weren't flash. Minus 2% for the September quarter, or possibly worse, Philip Lowe said today. And the recovery is going to be slower than the first bounce back. Of course, this time last year, we were looking at a recovery from the first set of lockdowns when effectively Australia got close enough back to COVID zero. And in doing so, the economy bounced back really quickly. And nationally, we enjoyed quite a few months of business as usual, effectively COVID-free. This time around, no one's expecting COVID zero, but rather a slow release of lockdown restrictions and a slow return to normal. That, of course, means the economy is not going to bounce back as quickly. The good news is they are expecting a full recovery and back to pre-Delta levels by the second half of next year.
Now, also of interest today, consumer and business confidence figures.
That was some good news too, Tom. I have to say the business confidence numbers were -7, so a 0 is neutral. -7 is not flash, and that was last month's expectation. The forecast for this month were almost doubling of that to a -13 points, which would have been pretty ordinary. The good news was confidence actually improved. Still negative, but to -5 from -7, so a net improvement, and to some degree, hopefully, a reminder that business confidence is a leading indicator, does look at the things like inventory purchases, wages in particular, and also hiring. Hopefully good news for the economy as businesses feel more confident than they did this time last month.
And finally, Scott, how's Wall Street looking?
I get to finish with a positive again, Tomo, so this has been a good news day. The good news is US futures currently up about 0.1%. That's not a super strong number, but it's positive, it's green, and hopefully it'll mean good news for us tomorrow morning.
It's encouraging. Scott Phillips, thank you.